Live and ready to roll here. This was a little bit last minute, not the topic, but getting the actual technical pieces together on the webinar because I was fighting with Zoom. If you are watching this after the fact, sorry you weren't able to join us live. It was my fault for not being able to let you know about it sooner. But what we're planning to talk about, or what we're going to talk about on this session, is business funding options. So not necessarily, to purchase property, though in some cases that might be the business use of the line of credit or funding option. But we're talking about all different kinds of more commercial or business oriented financing and funding options, lines of credit, SBA loans, things of that nature, which might be something that you're looking for yourself, or you may have clients that are actively looking for financing for something like that, or might be in the future. They're looking for funds for a startup, or to buy a franchise, or for equipment. Yeah, equipment's a big one, right? So any number of different um, applications and uses, etc., for this type of funding, and the fun, but also somewhat difficult part would be is matching up the right option for the use. So, Jordan, where should we start on this topic?
I
A
would
good place
start
to.
with kind of what they're looking at. You know, what are business and this will vary dramatically depending on what type of funding you're looking for. For example, equipment financing might have a different credit score requirement than inventory line of credit, right? If someone needing, a line of credit for inventory, a short-term kind of loan.
Yep.
So it's a little bit of give and take, so it's kind of all over the board. But really, what they're looking at is instead of income necessarily, they're looking at gross revenue, not net, gross sales. Okay, number one, that is our income, and at sometimes they don't even look at that, right? They don't consider that at all because we can do startups and other things that are available. Number two is going to
Jordan,
be
on that point, I want to tie it to something that we talked about last week. So last week we were talking about self-employed or mortgage financing options for self-employed business owners, freelance workers, et cetera. And one of the options for them is bank statement programs. And typically they'll look at the bank statements, Jordan, and immediately what? They'll cut it. They'll
They're
attribute.
cutting, yeah, they'll take 50% of whatever gross they're
Is there a
depositing.
rule of thumb on this side, on the business funding side?
Nope. There's no
Okay.
rule of thumb on the business funding side. They're looking at the gross sales, right? It's not based off of any net calculation or anything like that. It's just, do they have enough sales? I would say if there is a rule of thumb, there's a rule of thumb of any type of financing. They want the gross sales per month to be 1.5 times whatever they're trying to finance.
Okay.
So they do it in those terms, right? It's like, okay, they want twice the sales of what you're trying to pull.
Okay. So let's put that in black and white.
Mm.
So you said you already lost me. So
Okay.
if I'm asking for $100,000
Yeah. Your sales would need to be at least monthly $150,000
gross
gross.
sales, okay, just
Gross sales.
gross sales.
Hmm.
Okay. Yeah, fair enough.
Yeah.
Fair enough. That makes
So
sense.
it's not, yeah, that's really it. I mean, there's not any other, calculation for it. That's really rule of thumb. Like I said, there are programs out there that are not going to require any income at all, really. It just depends on what they're doing, right? What is going, what is the requirement. And I'll give you an example here. Equipment financing. That equipment's going to produce money, right? Some sort. So let's say you have someone wanting to buy a Bobcat. I don't know, just anything. Uh, that is something that you could offer, and it's not going to require any type of sales. right? It's going to require the business to be in, a length of time, which gets into our kind of our next pillar is how long the business has been active. The general rule of thumb there is going to be about 6 months. Minimum is going to be about 6 months. The business has
Okay.
to be active for at least 6 months.
Okay.
Ideally 1 year.
So there's got to be some kind of track record,
Yeah.
ideally. Although, again, so we're speaking in. Here's the thing that's hard with talking about this topic. There are so many different options that like it's hard to it's hard to perfectly bucket them all because there are so many different options and ways to slice up the different pillars or what's available.
Yes. And then the last one's going to be FICO score. There's not really a FICO score. Most of them do not have a minimum FICO score or a very low FICO score. They don't put a lot of stock in it like on mortgages. I don't know why necessarily. But you'll see most of them are going to have no minimum or at least a 550 minimum.
Okay.
Okay.
So we talk on the mortgage side, you talk often about the three pillars being credit, assets, and income. Okay. The same kind of still applies, but there's different emphasis on different pillars depending on the type of business, depending on the type of funding request, depending on the amount of funding request, et cetera. Is that fair to say?
Yeah. Yeah. And it's more or less centered around how much the gross sales are and how long you've been in business.
Okay.
Everything else kind of, falls into place. So when I'm asking a client, when I'm trying to figure out, what a client needs or a customer needs, is the first question I'm going to ask is what they're using the money for, right?
Right.
That's going to directly kind of dictate what financing we're going to have, whether it's a business advance, whether it's equipment financing. Go ahead. What are
Well,
you gonna say?
so what would those be? So a business advance, equipment financing. What are like the typical reasons why?
Business lines of credit is usually it's just a very general broad
Right.
is probably the most common that people apply for is, hey,
Okay.
I just want some money to run my business in multiple areas, right? It's not
Okay.
just I need some inventory, I need some equipment financing, I need some yeah, I just need a essentially a line of credit so I could pay down and pull out, pay down, pull out, just use as much as I can to grow my business. So that's going to be
Right.
the most common, but it's also going to be the most stringent because it is a line of credit and it's something that can be pulled from multiple times. Okay. So credit scores are usually a little bit higher.
Okay.
Well, when I say higher, a 551, it
Right.
requires a
Right.
credit score of some sort. And typically they want to see anywhere from monthly sales from $25,000 to 300,000.
Okay.
Okay. Anything below that, it's not a big enough loan to really make sense for them, for these companies to do those loans.
Okay.
History wise, they want to see about a year.
Year in business, minimum $25,000 in sales, minimum 551 credit score.
Yeah.
Okay.
Yeah.
Okay.
Ideally, we want to be a 600. It will open me up to the more lenders. So when you're offering these business line of credit, we're signed up with what? 5, 6 lenders at this point, that
Yep.
offer these business lines of credit. So 551 is the lowest that we have. Everyone will offer something at 600 and above.
Yeah.
So really we want to see about 600 and above. And that's where I'm asking, really one of my questions is what's the client's credit score? Their personal credit score, not a business
Mhm.
credit score or anything
Right.
like that. What's their personal credit score? 600 or above. And then I ask what their grocery sales are, what their monthly grocery sales are. And that will be our pillar, our starting point of what available option is out there for them. With that being said, okay, with that being said, it is you can do term loans for less requirements. For example, you don't have to have any time in business if you do a term loan. There's no time in business. It's not a line of credit, but it might not be someone's first choice. Hey, I want a line of credit for something, but if they haven't been in business for a year, maybe a term loan's the only option until they can get to that year point. So there's other options out there. These aren't like a make or break deal, because a term loan essentially is just a loan that you can't pull from again.
So it's a fixed term. That's literally what it means. And
Yeah.
so if someone were, what would be the most common applications for that? Like why would
Almost no
someone?
one apply. No, I mean, like, business, just startup costs typically. Someone's trying to I mean, again, it could vary on what they're trying to do. Maybe it's just, hey, I'm trying to give myself money, some running room to focus 100% on this business, and I'm putting all chips in.
Yeah.
All the chips in basically. It just depends what it is. Most people don't apply for these. Most people apply for business lines of credit, and then they get moved into term loans.
So that would be startup. Yeah. Startup could be even
These
franchise,
are just general loans, right?
Yeah.
You could do anything with them, right?
Yeah. Okay.
It's not based off of any particular scenario. Uh Now with that being said, a business advance, there are options for business advance. So if they're saying, "Hey," and that's why it's so important to ask them for me to ask them and get to know what they're trying to actually do. Like, really,
Yeah.
what do you need the money for? Because a business advance, for example, has no credit score requirement at all. They don't even pull credit. That's just a type of loan. Now,
What is a business advance loan?
business advance is just someone that is getting an advance on their bit, whatever profits they're going to make it in the future, basically.
Okay. So the company would look at, okay, based upon your track record, we project this is what you should make over the next month, 3 months, 9 months, whatever. We will advance you this amount,
Yeah, we'll
this amount.
advance you this amount to expand or do whatever they need to
Okay.
do.
How do the
So
terms work on stuff like that?
typically, it's gonna vary. Okay. On revolving debt, it's based off 52, it's paid by week. It's over 52 weeks and it amortizes up to 36 months. Okay,
Okay.
on revolving debt. On term loans, it's 1 to 2 years. It can go as long as 5 to 7 years, but the normal is 1 to 2 years. So everybody offers 1 to 2 years. There's certain banks that will offer up to seven,
Okay.
almost like a car loan.
Okay.
Uh Collateralized programs. So these are like, and we won't typically run collateralized programs through our business lines of credit because we're also a commercial lender at NEXA, right? So we'll run our collateralized program through SBA, SBA loans. We'll run them on longer terms, but their business loans, collateralized programs are usually 2 to 5 years, very short term business loans on property, right? It's maybe they're bridging over a property, pulling out equity to start a business, doing something.
Yeah.
Um, it just depends. It depends on what they're collateralizing and what they're trying to do, whether or not we take it the commercial side or directly to a business line of credit. Uh, but 2 to 5 years on those. Their SBA loans, real estate, loans are going to go up for us up to 30, 25 years is usually the norm, 30 years. And
Okay.
then business advances, you're looking at 6 to 24 months, equipment financing 1 to 5 years. And yeah, it's really, I mean, we can go on and on and on, but I would say the norm, it just depends on what you're trying to do. But I would say less than 10 years is the norm on 99% of the
Okay.
programs.
Okay. Fair enough.
Mhm.
Now, I mean, we could sit and banter about this all day, back and forth on these topics. But one thing I definitely want to highlight for those that are here is because of the nature of this type of funding, it is completely legal for you to earn a referral fee if you were to refer a client.
Mhm.
And there are several ways that that can happen. We have lenders that we're signed up with that you could also sign up with and be an affiliate with them. Some of them have multiple tiers of compensation. So, for example, if you signed up under Jordan or I, and you brought a client, not only would you get a referral fee, but we'd get a little piece of the action as well. Some of the lenders don't have structures like that, but we've got relationships with them, and we can just like if I'll just grab a name here, just like if Trudy came to me and said, "Hey, Josh, I have a buyer who is moving to Central Pennsylvania, and they want to buy a new construction home in Carlisle. A, can you help them? And B, would you be willing to pay a referral fee of 20, 25, 30%, whatever it is, right?" We can do that same, we can structure that same type of arrangement on these types of transactions. So you reach out to Jordan or I and you say, I have this client, they have I don't know, they have a restaurant and they need more equipment, or they have a roofing company and they need they need capital for whatever it is, right? Equipment or you know the payroll management, any number of
Inventory.
things.
Yeah.
Yeah, we can collaborate and we can negotiate something that's fair for everyone involved, and see if we can help them. Some of the lenders or companies that we're signed up with are direct lenders. Okay. And some of them are
Brokers.
essentially brokers, right? So they're like, they're a platform where different lenders will collaborate, right? Which is similar to the financing side. There's some of that on the mortgage side of things as well. But I just wanted to highlight that for everyone. Not that it should or could become a distraction for you production wise, but let's face it, if you're doing your job as a realtor, you're probably talking with a lot of people, and just to have your reticular activating system going when you talk with folks that own a business, or you hear somebody talking about someone that does, or whatever, you can ask better questions and just be sort of in tune with those conversations. Not just because it's dollar signs for you, though that's nice, right? But also, you're helping a business owner in your market, right? You're helping the economy potentially in your market. You're doing good and providing, a service and help to others. Um,
The other way, because me and Josh talked about whether or not we wanted to do a class on this for a little while, not too long, but a little while we chatted about it. I truly believe in this market, no matter what, we need to add more value to real estate agents and anybody we're working with as well. When I talk about true value, a true value to me is helping you produce and make money. I want to put a dollar figure to it. I don't want to be that loan originator that says, "Hey, I have the best products and the lowest rate possible. You should use me." I want to make sure we're doing practical things to help you generate income inflow in this market, because it is a low inventory market, and it's we have to get through it, or
it's tough.
it might be this might be us forever, at this point, and just we got to make it work. So I don't know, but I know for me and my philosophy is to make sure that we're providing things that you guys are aware that it's out there. This is something that is out there. There's something that's out there and something that you can participate in, just like our reload program, or whatever, anything else that we could offer you to potentially increase your income.
Yeah, I mean, our objective with these sessions and some of the things that we're creating and doing at all times is, how can we help you increase your gross commission and just revenue in general, um, in your marketplace. And so for some of you, that might mean being, exploring the dual license opportunity, which is, if you scan that, that'll give you at least a little overview or background. For some of you, it may be just what we're talking about right now and adding that as another potential revenue stream. But the more ways, and this always starts with being of value and service, right? So I always want to preface that this is not about, how can we squeeze every last cent out of every client that we have, but more so, how can I increase the value that I bring to my database and thereby be properly compensated because of that as well. And so let's face it, if your only earning potential is real estate commissions, as wonderful as that is, and as a tremendous an opportunity that is, it is limited, especially in a low inventory market. If you layer on the ability to earn commissions on mortgage and related financing, whether they be refinances, traditional mortgages, hard money, DSCR, etc. Now you've maybe not doubled your income potential, but you've improved your income potential. And then when you layer on this as another option, it means that you have more ways to earn and grow your business from the same audience, right? We're not advocating going and building three separate businesses. The core tenets that Ryan and I, there are two core activities that Ryan and I talk about all the time on our Wake Up Real Estate show that you as a real estate professional, and honestly, in any business, your two main jobs, besides the actual thing that you're providing, right? Because all of us, besides the actual service, which should be a given, your two primary roles are to grow your database and nurture your database. And these, whether it's our reload program and or these business funding options and sources, are a way that you can earn more from those two activities by growing your database and nurturing your database and communicating some of the different value propositions. That gives you more earning potential. And why not? Especially when, again, the numbers say, I think the numbers came out that the total units sold in the U.S. last year was somewhere around 4.1 million versus the two years prior, it was over 6 million. That's 33% less. That's 33% fewer home sales times two, typically a commission on both sides of those. That's a lot. That's a lot. And yet people still need help. We're talking daily with people about HELOCs because they're looking to make renovations or improvements to their home, or they're looking to consolidate consumer debt, or they're looking to invest. We're talking daily with people who are looking for DSCR or fix and flip funding. We're talking daily to people that are exploring traditional cash out refis to consolidate consumer debt, right? And even though their rate may be higher than their current rate, it still puts them in a better
Achieving an
financial
objective.
position,
Yeah.
right?
Depends on the
So,
objective.
yeah, I know I'm getting off on a tangent a little bit from the business funding concept, but that was one of the reasons why we wanted to bring this to your attention. Is it is a natural integrated opportunity to the work and the activity that you're probably already doing on a regular basis, right? The clients you're meeting, a certain percentage of them are going to be business owners, right? And so you ask questions about that business, and what's going well in the business, and what do you need help with, right? And that naturally will unlock some
Yeah.
opportunity there, right? And
Yeah,
so
anyone
just
can offer business funding. So I think practicality is important. I have cheat sheets for this stuff, Josh.
yep.
So I think I'm gonna drop them in the chat here. I think it is too complicated to, and I built this over the last, I don't know, couple years. I don't know when we started doing business loans, a few years. And I think at the end of the day, I don't uh I want to make sure that that people understand of how would I do it? How would I have the conversations? There's a little practical piece to this.
Mm-hmm.
And the first is going to be exploratory questions.
Yep.
Right. So I'm dropping in the chat my exploratory questions, and it's very short. Okay. In the terms of our questions, I'm really just asking about what we talked about today is history, what type of business they're running, what kind of funding they're looking for, and what their credit score is. And then really from there, we start filling out applications from there if they, if I can find kind of a bucket that they would fit in. So the
Yep.
first is going to be exploratory questions, which it is not allowing me to upload for whatever reason. So I will send that to you, Josh, if you
We'll
want
get it
to.
to everyone, and we'll make
Yeah.
sure that so we always take these recordings and add them to the Wake Up Real Estate YouTube channel and Wake Up Real Estate as well. We'll make sure that we get the any accompanying documentation, Jordan's exploratory questions, things of that nature. We'll get that added to that. And if you can't find it for whatever reason, just reach out to Jordan or I or Mike on my team, and we'll make sure that we get you the info so that you can, just have that when you do find yourself in those conversations, right? And not
Yeah.
that you're gonna like, interview them and get all, but just like you're just being curious, right? Oh, what do you need the funding for? How much funding are you thinking? How long have you has the business been in operation? Things of that nature.
Yeah, it's like 5 questions, 6 questions, but
Yeah,
it has a little bit of coaching on each one. What are you looking for, that kind of thing.
sure.
I just find it's easier to kind of give a guideline out than it is because these conversations is like a lot of them are like, what do I say? How do I approach the conversation? It's a very easy conversation is when the business owners, hey, we offer business loans. So I know a couple lenders that will do business loans. Do you mind
Yep.
if I ask you a couple questions, kind of thing?
Yep.
So, what else, Josh? Anything else that
I think
there's one thing I do want to go over
okay.
because I think it's
Good.
super important that on guideline wise before we finish up here, Ed. Uh, they no matter what, if they've ever defaulted on a business loan before, think of it as like a running list, like an FBI list, is the best way I can describe it. They will never get funding
You're
again.
on the most wanted
Yeah,
list.
you'll never get funding again if you've ever defaulted on a business loan.
There you go.
So there's a search that they do to see if anyone's previously ever defaulted. It's like a kind of an industry standard.
Okay.
So that is one of my questions that I ask someone is if they've ever had a business loan before and if it's ever, been, was it defaulted?
Okay.
Uh, you'll be surprised on how often that happens, right? When people pull business, because business sometimes don't work, right? People have ideas and they don't work. But once they default, it's kind of like having a foreclosure, when you're
A
trying to
deal
buy a house
breaker.
yesterday. It's a deal breaker.
Yeah.
Okay.
Okay. Good
All
to know.
right.
Good to know. So if you have questions, if you have scenarios, if you want to explore this further, if this is something that's like you feel is in your wheelhouse and you want to chat with Jordan or I, my contact information is in the chat. I'm going to drop Jordan's as well. That information, if you're watching this on replay, should also be readily available for folks. If you're curious, we're not hard to find. We're on socials. You can find us. And we'll also get the Jordan's exploratory questions added for those that are interested. Um, and we'd love to help any, whether yourself or any clients you may have that have a business funding need. Um, it's right up our alley. We like exploring these things and trying to find a solution for them. So let's chat and let's see what we can do next week. Next week we are going to we're going to talk about the reload program in more detail. We did an info session in November, but it's been a while, and so we want to revisit it. So if getting dual licensed or being dually licensed as both a mortgage professional and a real estate agent, if that's of interest to you, or you know anyone who that may be of interest to, you should definitely join us next week. It'll be Tuesday, 1 Eastern, and I'll be sure to get the link out much more in advance for next week. Just had a technical issue with Zoom for this week. So definitely come join us for that. And as I said, if you have any questions, you want to connect, you want to explore, we would love to chat and see what we can do for yourself or for any of your clients. Thanks, Jordan.
Yeah, no problem. Thanks, guys.
Take care.